Neeraj, where are you picking your spots in the market? I mean, last time when we spoke to you, you were bullish on ethanol-based companies. You were bullish on some smart specialty chemical companies also. Anything else which is there on your radar?
Actually, recently, PSU banks were looking attractive, so that is where the movement has also started. I think some more move should be there in PSU banks because, initially, of course, an interest rate cycle going down, there is some pressure, but I think now we already had two cuts and the third is also expected. I think going ahead, they will get further benefits and some credit growth will also come in. So and with clean balance sheet, a lot of them have really very strong balance sheets now. So PSU banks is one where the action can continue. Besides this, real estate companies, I think they're also, if you look at the larger ones like DLF and Godrej and all are doing well. They've also picked up from the low level that they saw, but even some smaller ones are looking interesting. They're giving good guidance as far as pre-sales are concerned, as far as gross development value is concerned. So there also, I think one can look at stock-specific ideas. Plus, anything to do with construction, infrastructure related, that is the space where I feel that because the last quarter saw good pickup in government capex also, so order books also strong. So we saw decent results from L&T. I think execution should pick up now also, and that this year also can be a good year for these infrastructure and construction related companies.
You've got Britannia, like Snehi was highlighting. That's of course one stock which is going to be in focus. One of their employee union strikes has now been called off at one of their plants in Gujarat, so that may see some relief. But in any case, post that edible oil import duty change, you did have the entire FMCG pack in any case hold out. Neeraj, anything that you're liking within FMCG, or would you say for a longer term play there are better opportunities in the market than that?
I think in the medium term, short to medium term, also in the next 4 months, 6 months, I think FMCG looks good to me. If monsoons are as they have been predicted and they continue to be on time and we have a decent monsoon, inflation is low. So all this, and plus, the recent import duty cut by the government, all these factors augur well for the FMCG space. So Britannia, of course, has done well from the levels of 47, 4800. It was languishing at earlier. Hindustan Lever also looks good. I think that also stock in the next 3 to 6 months can give a decent return. So I think FMCG should be part of your portfolio, or even in the short to medium term portfolio to give you a decent return.
All right, so that's the take coming in on the FMCG counters. Some of these large cap names should be a part of your portfolio. That's the call coming in from Neeraj. But
Neeraj, there's been a re-emergence of the entire defense and railway pack, right? Pretty much across the theme when it comes to defense in particular. Do you think there's opportunity even after the run-up that we've seen in both these segments?
Actually, for the defense segment, even post the Pakistan clashes that we had recently, I was positive on defense because the stocks had corrected, and there was a long-term view that taken that defense should do well. The kind of budget which we have defense and the Make in India, push that government is doing. So keeping that in mind, there was a short-term spurt because of what happened in the geopolitical, because of those concerns. That short-term spurt has made them a bit expensive for the shorter term. But I think if someone has a longer-term view, one should look at opportunities whenever you see some corrections in defense stock. Stick to the larger ones. You have the likes of Mazdok or BEL or HAL. They have done really well for the last couple of years also. And in the short term, because of the movement, I think I'd rather wait and look at opportunities to get into these stocks. And as far as railways is concerned, I think railway stocks have started moving, but they're also the move has not been so sharp on the upside right now. I think there is still potential there even for short to medium term. I think railway stocks, because the order books are good, execution has started picking up. I think this execution started picking up quite late in the last quarter, so we don't see that full impact coming in the March quarter. So I think going ahead, you may see that impact coming in execution which may improve in the railway companies. So I think railway is one where I think even in the short to medium term you may get some opportunity.
All right, so railways in the short to medium term can offer an opportunity. But Neeraj, what's your take on Vodafone Idea? Because in the numbers, yet again, a loss on the bottom line. But the ARPU is seen to be increasing, and industry is working with an assumption that going ahead, there could be further tariff hike, and analysts are estimating that to be of 15%. And along with that, Neeraj, once again, the chatter is around that the company yet again is in talks with the government to have some concessions on the dues. But give us your take on Vodafone Idea at 7 rupees. How do you see the stock?
Actually, I've been avoiding this stock at whatever prices, whatever news flow has come their way. I think that has paid off till now. So I think I will continue with my stance because, see, most important thing is that you should start gaining market. You should start gaining some customers. That is what is not happening for Vodafone Idea. So I think till that happens meaningfully for few months, I think not 1 or 2 months, a few months, then only one can make a base case where Vodafone Idea may have made a bottom and you may see some improvement. But I don't see that happening right now. So I think I would still avoid it. There may be a couple of rupees move on the upside, and the percentage that might look good to some people. So for a trading point of view, but I am avoiding it, and I'll not really go into it.
Makes sense.
Neeraj, help us with your take on United Spirits as well, because today morning we have a note coming in from JP Morgan where they have not just gone ahead and upgraded the rating on this counter, but have raised the target price to 1760 now. Do you also like this stock, Neeraj, and what's your overall take on the Alcobev sector?
Yeah, I like the space and I like United Spirits also, but I don't see too much of an upside from these levels. That's why United Spirits is concerned. We had entered, I had advised and entered United Spirits, at about 800, 900 levels. And it has taken a lot of time to reach these levels also. So I think if someone wants to keep some alcohol stock in the portfolio, United Spirits is definitely a good stock to be in the portfolio. But then, one can't expect too much of an upside from these levels and not a very good return from United Spirits as far as a couple of years is concerned.
Neeraj, it's so good having you on the show. Thank you for taking the time out and joining in today.
If you like this video, then like, share and subscribe to ET Now.